Hey guys, we're here on the Commodity Report. Kevin is not with us today. He is okay. It is Thanksgiving week. He is just he's I think he was in Miami actually, and maybe going back home for a few days. So
Not a bad place to spend Thanksgiving.
yeah. I don't know if he's there all week or what exactly is going on, but Kevin's on vacation, so good for Kevin. Last time he went on vacation, he was ice fishing. That was pretty cool. He was in Alaska ice fishing, and now he's doing something else. So we'll talk to Kevin when he gets back. It's me and Sam today. So we've got a lot to talk about you guys today, but the first thing I want to talk about is the dollar. Sam, what are you thinking of the dollar? We've been talking about this thing forever. Oh, I got the old chart of the dollar. My bad. New chart of the dollar. Sam, what are you thinking about the dollar? In the top end of the range, it broke out of the top end of the range for a minute, gave us all a fake out, and now it's closing back into the range. What do you think about the dollar here? Do you have any feelings about it one way or the other?
I do, yeah. I think this is really a great level to place bearish bets on the dollar. Like the dollar has reversed here on numerous occasions, and it seems to be doing it again. Like we wicked above the shelf of former highs last week on waning momentum. The momentum was getting weaker as the price was going up, and now you're seeing it start to roll over here today. So I really want to see today's sell-off stick, and I want to see the bears come in tomorrow and follow through on it. Um, Adding to that, it is the worst time of the year to be a US dollar. I think we've been pounding the table on that as loud as we can these last several weeks. So if you are betting on a risk asset rally into the end of the year, this US dollar is a major tailwind for that.
No,
Now,
I
on the
agree.
flip side of that, it looks like a smiley face. Like we draw smiley faces and we say we buy these faces all the time. And you have the advanced decline line data. I'm not sure if we can pull that chart up, but that chart looks very similar to this, with the one caveat that it is decisively resolving higher. So that makes me question how much this has to the downside, but I do think it goes lower into the end of the year. But next year could be a different story. That's where my
I
head's at.
feel the same way as you do, Sam. I think we talked about that seasonality chart recently. I don't know if I still have it. I had to delete a bunch of stuff recently. Oh, there we go. So the U.S. dollar seasonality, as Sam was talking about, we're seeing it rolls over towards year end almost every single time. If we're looking at the election years, which is the gray line, that's definitely rolling over hard. The last 10 years, which is the red line, that rolls over hard. So it consistently rolls over in a year end as people run into more risk on assets.
Is that
Makes
the
a lot of
fundamental
sense.
driver of this, you think? Is there anything else driving this? 'Cause I
I just
really
think
don't
it's
know much
money.
about this other than the tendency to fall into the end of the year.
I think that it's if we look at it, so there's things like once again, and this is going to go against somebody else we have on a lot, but I love this person. I just have a very different view than them. Tax loss selling, people go loss selling in the year end, usually bearish. And the way you think about that is no, it's not usually bearish. Just look at the data. For example, people go, okay, summer driving season makes gasoline prices move higher. That's not true. There's actually a ton of supply that goes onto the market around that time, and it makes gas prices go lower. So usually gas prices get hit in the summer, as opposed to what people think, which is gas prices move up as more people are driving. As we get into year end, we see the dollar here is a very similar situation to that, where people think tax loss selling, which means people are taking money out of stocks, going into dollars. But what we see is in the flows and what actually goes into the market around these times is that we don't see money going out of the market. We see more money going into the market. And so as we see money going into the market, people are saying, well, I don't want to hold these dollars anymore. I want to have something that's going to give me some alpha, make me some money. Therefore, I'm going to put it into the market. And you see the line getting steeper in election years. Why does it get steeper in election years? And the reason why it gets steeper in election years is that you have people hanging out all year long to the dollar, going, the dollar's great. We got to own the dollar. I don't know what this election's going to bring. I'm terrified of Donald Trump. I'm terrified of Harris. You know, she's going to bring socialism. Donald Trump's going to be crazy. You know, everybody has these opinions. So they keep all their money in the dollars. And then once the election happens, they start to go, well, maybe I want to be back in the market. Maybe now things are settled down. Thank God that's over. Whatever it is, people start to put their money back in the market around those times. So that's where you see dollars coming. People saying dollars aren't really that valuable right now. I'd rather be in the stock market. And that's where I'm going to make some money. So if I was to really boil it down and try to think about it, that's how I would think about it.
Jason, would you be able to pull up the 2016, 2017 US dollar index? Because that was the first time Trump was elected, and the dollar screamed higher. Very similar to today's rally.
I think I actually have this chart,
Yeah.
which is
this
not
is it.
exactly just the dollar, but the dollar's on the bottom part of the index.
Right. So like you can see there on the far left side of the lower pane, it took until the end of the year for this to roll over. It started to roll over in very early January. So that's definitely a possibility, is like we could get more upside, potentially like a false breakout. I don't know. But I think that is a possibility.
Yeah, I think you're right, Sam, and I think there's more. I think there's this breakout that we just saw. This, you know, let's go back in case somebody came on just a second ago. This breakout that we just saw here, we see this breakout to the upside, and then it reversed lower. So if you go back to any trader, you know, JC calls this the oops pattern. Victor Sprandio called it a 2B reversal. You know, so all of these patterns throughout traders in history has worked out very well for when something gets above a range and gives us a false breakdown signal. This is a false breakdown signal. And I think Sam's right. If you're going to take bets now, bet on the dollar falling. Bet on the dollar falling unless it gets above. I mean, it's a really clean risk level. You bet on the dollar falling until it gets back above 107.50, somewhere around that zone. 107, you could have it tighter than that if you want, or the old high that we hit. Have it at any of those zones and look for that reversal, and possibly that gold would be also something that's going to be telling. So if the dollar really does continue to fall, now it's a one-day basis. I'm not saying today look at it and read into it too much. On a one-day basis, you're going to see correlations change like crazy. But in the long run, if this is a real reversal and this thing's really going to move lower, we are going to see a lot of these assets move higher. We're going to see Bitcoin move higher. We're going to see gold move higher, silver move higher. So once again, I think it's a very, very good observation that Sam put out here, which is take some bets against the dollar here, especially today. You got a good dip in gold if you're a dip buyer in something. You could buy a dip in gold. You could buy a dip in silver. You could buy a dip in Bitcoin even. There's a lot of dips you could be buying today and trying to sell either at the top end of those ranges or out to new highs.
There aren't many dips that I like buying more than silver. Above 30, the risk could not be more well defined. Like you can own as much silver as you want above 30. I think that is, it stands to benefit more than a lot of things from a weaker dollar. So
yeah, I like
if
that.
we want to express a bearish thesis on the dollar, I think silver is a great way to do that.
Yeah, I mean, and it's all the way down to the 40-week moving average or the 200-day moving average, however you want to say that. So if you're for me, I like to use the 40-week, but you can use the 200-day. It's the same thing. But look at it. I mean, we've been bouncing off of a level just slightly above that over and over again. I think this would be a good time to buy a dip. I think I agree with Sam here. This is smart, and also this is an upward sloping 200-day or an upward sloping 40-week. That means a lot as a technician. You look at those things and you go, okay, we're seeing an upward sloping 40-week moving average as opposed to a downward sloping. You see
Or sideways.
Yes. You see here when it's sloping down, you're seeing that we're breaking out. Sure, we're getting above those levels, but we just close back below them and go lower. Then we try to base, and then finally, once it's moving back up again, we consolidate, and then we break out higher. So it's an upward sloping moving average like we saw here in 2020, like we saw here in 2019. So these moves could be massive, and I do think that you buy a dip here in silver. For me, Bitcoin, I like Bitcoin, but I don't like it more than buy. I would rather buy a dip in something like silver. I think Bitcoin, if I'm thinking of anything, I think it's a little bit overdone. I think silver is probably the one that you'd want to buy. However, I do think there's more upside in something like Bitcoin. I do think this thing's going to break out to the upside at some point as well. But we just have to see and continue to pay attention. But the dollar and the euro is basically just the inverse of the dollar. This is basically either going to start closing back above these levels here. And let's throw a level on there for people who actually trade the euro. You know, people outside of the United States, sadly, most people in the United States don't trade currencies. That's very sad. It's very sad. That makes me very sad. You guys should. Everybody should trade currencies. Currencies are very important, and they make a lot of money. So getting back above 104, it's basically 105 at this point on the euro. That could signify a nice move higher and another false breakdown signal for the euro and a false breakout signal for the dollar. So I like this idea here, Sam. I think this makes a lot of sense.
Totally.
So,
yeah. And going back to silver, can we do that for a second?
Yeah.
Like, it's just now trying to resolve this textbook base, and not many people are talking about it. Like, silver has outperformed gold since gold broke out in March. And gold has gone on to hit multiple targets, and silver has not. Silver is just now getting started. So just to reiterate how much I like this.
No, I think that makes a lot of sense here. And sorry, there's no magical parabolic things on TradingView. You guys should probably fix that, TradingView, if you want to. That'd be great. But yeah, look at that huge head and shoulders pattern that we're seeing here. And so we're finally just getting out of it. Like we're not extended here. We're not breaking out to crazy overbought levels or anything. We're just at a good level that's saying, hey, we're just making higher highs and higher lows here. And also keep in mind, we're getting into that seasonality period that we like for gold and silver. End of December into January is very bullish for gold and silver. It's actually bullish for oil too. So seeing that seasonality kind of come into play. Now, seasonality is not something you can trade on, but it is something to manage your expectations with. And so for me, I would think more upside in silver, more upside in gold. If you are a dip buyer, take your opportunities in something like silver. If you're a breakout buyer, wait for new highs and then buy there. So I think it's a very simple risk to reward thing kind of coming on here. So the next chart I want to talk about today, Sam, is let's talk about interest rates. Now, this is the funnest thing to talk about. Everybody in the world loves to talk about interest rates. I'm just kidding. It's just me. But if you look at this chart and you look at the Fed rate, which is the brown line, you look at the 2-year yield, which is the blue line, these things went in completely different directions the second the Fed started to cut rates. Why would that happen? Did you get an answer to that, Sam?
Because inflation's coming back. Point blank, period. Like, you can look at Polymarket and it's very similar to the CME Fed Watch, but like the market has almost completely priced out the possibility of further rate cuts. You've seen, like you mentioned, the 2-year yield go in the complete opposite direction as the Fed funds. This is kind of the market's way of telling the Fed that they're crazy and they're wrong and this is not sustainable. And from an intermarket standpoint, you see things like energy starting to really pick up, which is one of the most inflationary trades there is. So that's what it's saying to me. Do you agree with that?
I completely agree with that. I think it's inflation is probably coming back in a very nasty way. And once again, here's the thing. What are everybody expecting now? even people who don't like the president, I'm talking on both sides. And for me, I'm very apolitical. You guys who are actually part of my Substack, you probably know my political leaning, which is nothing in the Democrat or Republican camp. But the point I'm bringing up this for is that I don't really have a side in this. I'm just saying, and I get to observe what people do. Everybody thinks that on both sides that Trump is going to make a stronger dollar, stronger United States, stronger dollar, kill inflation. If you talk to people, why did you vote for Donald Trump? Why did you vote for Harris? If you have these conversations, they say the same thing for Donald Trump. Well, inflation was lower when Donald Trump was in office. I can't afford this lifestyle anymore. This is ridiculous. So a lot of people are betting on lower inflation here. I am betting on higher inflation going forward. I think that the interest rate markets have said it loud and clear. And once again, the president doesn't control these things. Like, people think like it's the president gets in office and he can change everything. And it's like, that is not the case. The Federal Reserve controls the money supply. As long as the Federal Reserve controls the money supply, the markets or interest rates can go where the Federal Reserve wants them to go. Sometimes they go against the way they want it to go. Like right now, they're going against, which is signaling somebody out there thinks that inflation is coming back. I don't know if a lot of
It's not
the
somebody out there, Jason. Like, this is the most liquid market in the entire world.
Well, I'm also
Everybody's saying the Fed's wrong.
What I'm getting at is that somebody is saying it in the price action. So what do I mean by that? So I'm saying countries buy bonds. This is me as a small fund. George Soros, even, he has a very large fund. Their money, they have a lot of money, but it isn't the amount of money China has in the bond market. It isn't the amount of money Russia has in the bond market. So if you look at those things and you go, well, who out there really believes that inflation's coming back? Well, countries do, and the huge funds do. So all these people believe that inflation's coming back. And for me, the bond market says a lot. And I think right there called the bluff on the Fed, going, you guys are not going to lower rates as much as you think you are. I think they're going to cut again. It'd be too political for them to come out here and they just started cutting rates, and they gave a 50 basis points cut, and then next thing you know, new president's in office and they go, we're done with rate cuts.
The poly market has them doing one more, and that's it.
Really?
But it's marginally, the chance of them doing one more cut is very marginally higher than not cutting. And the not cutting line is trending higher while the cut line is declining. So, like, that makes me wonder, are we really going to get one more cut? I think you're right. I think the odds favor it right now today, but who knows?
I think you're right. If we look at it, it's probably, I think one makes sense. But once again, I think you could go either way. Like, what if interest rates just continue to rally here, And so once again, it's like the Fed does have a lot of control on the short side of the curve. So seeing the 2-year rally the way it is pretty crazy. They could come in here and start to push that down. That's what I would expect to happen, and be the reason why we see that rate cut in December, and possibly one next year. So I think if we see those, I'm going to be I'd be very bullish on inflation if we do see those rate cuts. If they come in here immediately and go, okay, we're done, like if there's no rate cut coming up, then I think maybe they have gotten ahead of it a little bit. But I just think that it's too much. We don't see enough. We don't see enough evidence the other way at the moment. We don't see deflationary evidence. We're not seeing the trends in energy moving down. We're not seeing natural gas just getting hit. We're not seeing all these things that we would expect to see if that was the environment. We're just not seeing. So I do think that you're right. I think inflation is coming back. I think that's the simplest way to say it.
And what about something like housing? Housing has been one of the most inflationary areas out there that they calculate in the CPI. It's been incredibly sticky. Prices have not been falling. And then you have lumber ripping. You have lumber gold ratio ripping. What do you think about that?
Yeah. All the lumber, especially. Now, that's one we talked about in here a while ago. We had a show you guys, the headline of it, lumber and copper are telling us how to trade the election. And we talked about lumber and the massive buying opportunity we saw on it. We saw a band squeeze breakout. We saw a head and shoulders, inverted head and shoulders pattern. COT reports are insane. You know, lots of buying for commercials. Like basically everything you'd want to see fundamentally and technically, we're saying that lumber prices were going to move higher. At the moment, lumber prices are moving higher. You know, if we start to see copper really take off, if we start to see oil really take off, I would really double down on this thesis. I would go, okay, I know I'm pretty sure. You can't know anything for sure in trading, but you can be pretty sure that this can start moving the direction we're thinking. And one thing that is moving the direction we're thinking, natural gas. So we talked about this
there. That was sweet.
Yeah, yeah. You know, I gotta promote myself. You know, my calls.
Love it.
Not that you and I didn't say the same thing, but natural gas is just continuing to give us this breakout here, and we got above. And this is Sam's chart. This is a great chart here. We're above VWAP support. Another smiley face pattern. You know, it's you can see these smiley faces over and over again. And so what are you thinking here, Sam? Do you think where would people target natural gas? Where's the next move higher going to end up?
For sure. Yeah, I'm looking at a lot of charts like this right now that are completing this consolidation, this bearish to bullish reversal pattern. I think stocks like ARK, Zoom, just really junky stuff like that. We're betting on those reversals leading prices back to the former all-time highs. And I want to treat natural gas the exact same way. If natural gas is above this VWAP anchored to that prior cycle high, which comes in around $3, and we are above it today, then the path of least resistance is back towards $10. And that's a major move from here.
Yeah, and we talk about natural gas here quite a bit. We got Rick. Rick is in the backstage. Rick, are you ready to come on and give a thumbs up?
I know Rick likes the natural gas. I bet he has something to add.
So what's up, Rick? You're on mute.
First time.
Oh, he's not on mute. Let's see.
Kick him off. You're done. No, Jason, we got to talk about LNG too.
LNG, yeah.
Since Kevin's not here, this has been Kevin's darling.
Can you guys hear me now?
Oh, gotcha.
I've been a huge fan of the show for a while, but brought some charts.
Nice. Where you got you want to share your screen?
I slacked them to you. If
you slacked them to me, okay, cool. All right. So Sam, what did you want to say here about LNG? So yeah, Kevin's been talking about this one. We had a band squeeze breakout signal a long time ago, actually, that we continued to talk about. Now we're seeing that move higher. What are you thinking here, Sam?
Yeah, I really like this LNG. I know Kevin, if he were here today, he'd be citing the RSI hitting its most overbought level in years. Not a characteristic of a downtrend. This looks like an initiation thrust to me. I think this one has a lot more upside. And like we were talking about before, natural gas is just now getting going, has exponential upside from here. So this one should be doing well.
Listen, this one's been doing well, Sam. You've been pounding the table on this for months now. I mean,
it was very well advertised. It's not like I'm a genius, but the market
the leaders are leading.
Pattern.
The leaders are leading, man.
Exactly.
And as we're seeing the leaders lead, that is important. And what we talk about in trading is relative strength. That always matters. So whatever's leading usually continues to lead. Also here, Sam brought up getting overbought. That really does matter because we were just talking about it off mic. You know, everything is overbought. Every good trend is overbought. And that's not a bad thing. Too many people look at the RSI and they go, okay, that's the end of the trend. And usually like RSI can be used in many different ways. Sure, if you're a range trader, you could use things like overbought. I don't suggest it, but you could.
It's really good actually for range trading or mean reverting systems. Like if
I just
something
know
is
what I'm
in
good at and
range,
bad at. I am bad at range trading. I just don't
well,
do
like
it.
look at the dollar today. Like if we want to bet on this shelf of former highs continuing to serve as resistance, then you would want to fade it as it gets to that level with an overbought momentum reading. It's just a key characteristic of a range. And then like a key characteristic of an uptrend is you keep making higher highs after you get extremely overbought.
So how do you
keeps on going.
separate the two then? So do a teaching lesson for the audience. How do we separate the two? Because
I
something
think-
like this is more my style. We got a breakout. It's obviously it's the most overbought reading ever. I'm still going to hang on to the long side. Why would I hang on to the long side? Should I be selling? How would you do that?
Well, I think the textbook definition of a trend is just usually the right answer. Like, are you making higher highs and higher lows? That is an uptrend. And are you just finding resistance at the same level like the US dollar is? That is what a range looks like. It's not it's not easy to program.
There's no hard and fast rules in trading. People want to know like trading has this magical thing where we could just be like,
Very
yes, this is
subjective.
exactly what you do every time. And it's like, well, you figure out what type of trader you are. For me, I'm a breakout trader. I look for these breakouts. I like to ride the trends. That's the end of it for me. And other people who are range traders, they're good at that. I am not good at that. And they would trade in between this. If you look at LNG and they would go, okay, it's overbought here. It's oversold here. Overbought. See, I barely even know the terms anymore. Oversold here, overbought. You know, you just kind of go back and forth and go, okay, well, I could trade this range, and for me, I'd rather wait for the breakout. So there's just different ways to trade. Not hating on any of it. There's just, I'm not saying it's one's bad and one's good. Just saying I do it one way, other people do it another way. So
I think
anyway,
it matters about your risk preference too. Like trend following, you can get much larger gains, but you can also lose a lot. Like, yeah, like most.
Well, it's not even lose a lot. It's more
30%
chopped
win
up.
rates.
Yeah.
You know,
Range traders look a little smarter too, because they're calling tops and bottoms all the time. But,
exactly, and they have a higher win percentage, 60-70%. But they're
yeah,
not.
it depends on what. Yeah, it depends what you want to do. You can make a lot more money trading trends than ranges, but you can have a higher win rate trading ranges. Higher win rate doesn't mean more money though most of the time. So it's more of a how do you do it? If you're and I'm talking about more systematically. Sure, if you're a discretionary trader and you're trading ranges and you're very good at that, you can make just as much money. There's no cap on the amount of money you can make. But if I back test it systematically, like how much money can I make in a range trading system? How much money can I make in a trend system? You'll always make a lot more money in a trend system, 10 out of 10 times, basically. So, Rick, I got some of your charts. Let's see what we got here.
So let's do Comstock first, and then we do the freebie at the end because it's a hot sector. I'll just say that.
Hell yeah, love the Comstock, Rick.
I send them to you in order. So let's go from let's start to zoom out. So let's do the most zoomed in chart first, and then we can sort of zoom out. I sent them to you in order.
I completely messed that up. Okay, one second.
That's fine. The Comstock's been on a tear. I mean, it's up something like 4% today. I know we've been talking about it for a while.
Jerry Jones has been buying it for how long?
Oh yeah. Yeah. I brought a chart too showing how Comstock might be, for retail traders at least, one of the best instruments to express a bullish thesis in natural gas, which I hope we can show in a second. If not, I can just put them on a slide deck and send you the link if that's easier.
No, I got it. Just give me a second. I just had to upload them again. But go ahead, talk about Comstock. What are you thinking here? Do you think it's a buy? Do you think it's a sell?
Listen, I mean, I'm already in it, so I'm just happy with the way it's trading right now. But if you're not in it now, maybe as far as levels to define your risk at, we might want to look at something like, I don't know, like these things can squeeze. These things can really squeeze. Okay, this was the freebie, but we can do this one now.
That was first. You told me in order.
Oh, I'm sorry, man. I'm sorry. First time jitters, guys.
You're good, man. You're doing good.
ASP Isotopes. This is in the nuclear sector. These stocks have been going absolutely bonkers. I mean, this one's up over 200% past few months, and it's coiling very nicely at a key extension level. So looking at the 937, 935 as an entry level, but you can honestly jump it at the like once this little coil resolves, and it might be explosive. So you might want to do that, right? I'm thinking of doing that myself. I'm in the CCJ right now. I'm in the NNE, which isn't doing very nicely for me today, but that's why you have a portfolio, not just a single stock. But yeah, no, ASP, little freebie, could be big mover. These guys, if I'm not mistaken, enrich all the little materials you need for nuclear power. So also pretty small, so it doesn't really need a lot to move it.
It also has 24% short interest.
Oh my god!
3 days to cover. That's, yeah. But like the trend leading into this consolidation, what was that, like a triple?
It's something like that, yeah, something like that.
So are we going to get another triple out of this consolidation?
I mean, I'm looking at least 15. If you get a resolution above 937, 935, you're looking at 15 as your next logical level.
Love it.
So let's go back to Comstock. So now we're on Comstock.
Back to the natty gas. This is one of the best natural gas pure plays out there. And this is like zooming into the past year and a half or so. Textbook reversal pattern, right? I mean, I'm studying for my CMT. Sam already passed all of his exams, so he can teach you about inverse head and shoulders, but we all know about these patterns. So you make a lower low, and then you fail to make a lower low, and then the trend reversed, and it's been pushing higher ever since. You retested that level, which I marked at 1350. That must have been last week and a half ago. We got to retest that level. And I think it could really go back to that shelf of former highs, looking at 22. That's kind of where it stopped. Last time it squeezed, and this can really run. So I'm just happy to be in it now. Maybe looking to add some more, but if we can show some of the next slides, I want to talk about it a little bit, zoomed out, because I was just looking at the past year and a half. But if we look at this chart going back a decade, 2 decades even, it looks even crazier, doesn't it? I mean, it could be. Maybe I'm seeing things, but this kind of looks like a cup and handle, right? Kind of. Obviously,
sure. I think 22 is too low of a target.
Too low of a target?
Yeah, if we're betting on natural gas going back to $10, CRK is above 22 in that environment.
Oh my God, easily. See what I'm doing now is I'm doing the shorter term trade, the more tactical trade. So 1350 targeting 22, but once we're at 22, man, I mean, 65 is, it's a triple from there, roughly. And after that, it's just that key level. And if you do the volume at price, which I know you love, Sam, there's no volume in between 22 and 65.
Yeah, I love that.
0 volume. Like, it is ridiculous. It's ridiculous.
I also love how Jerry Jones has been accumulating down here along with you. Plus the 33% short interest in 11 days to cover. I don't think there is a better vehicle for natural gas.
Let's that brings me to the next. Maybe we can skip this slide. This is just showing the 40-week rolling correlation coefficient between CRK and NG. But since the 2020 lows, after we saw natural gas go crazy in 2020. I wasn't trading it then. I'm not trading it now. I'm trading CRK. But these are just the returns since. And UNG, it's a beloved instrument in the retail space because we don't have access to futures, a lot of us. But it's really, can I swear on this show? Is that okay if I?
Oh, yeah.
It's a piece of shit. It is a piece of shit. It is UNG is a piece of shit. No offense to the guys over at, I don't know, it's not Tecurium, is it? But it's just not a good trading vehicle if you're holding it for more than a week. You know, if you're doing a little swing trade here and there, maybe through leverage, maybe you're trading the boil even, it's not that bad. But if you're holding it for more than a week, you don't want to do that. You really don't want to do that. And the CRK has just been outperforming UNG. You can do a CRK over UNG ratio, but you know, it just passes the eyeball test. So this could, if it gets back to 22, I mean, I'm trading it now back to 22, but above 22, I think it could squeeze all the way back to 65 and then some. What do you guys think?
I love this. Couldn't agree more, Rick.
Rick's picks. You know, for those of you
Rick's picks.
For those of you guys that are Grateful Dead fans, you'll be familiar with Dick's picks. But you know, I always thought that the nickname Dick for Rick's was a little too funny. You know, so you know, if we call it Dick's picks, you know, people might get the wrong idea. You know,
It could be funny though. It could be funny.
Maybe if finance fails.
Next level, dude. Next level. Take it. I had a friend who did that. Anyways, let's move on.
Sorry about that.
So anyways, no, that's funny. I have a terrible sense of humor. Anyways, but now that we're looking at this, though, I really like that you brought up this chart, and we could talk about the UNG. Why does UNG look like this? So Rick and I were on the phone today, and I was trying to explain to him, why does UNG look like this? And it's the reason, like, if you look at other commodity ETFs right now, especially since 2020, a lot of those markets are in contango, or sorry, they're in backwardation, meaning that you're getting paid as you roll. So you're getting paid as you roll. So for oil, for I think corn is even in it still, you're basically getting paid as you roll forward. Natural gas, you're losing money as you roll forward. So basically, if you're looking at three, let's say, I don't know the exact price of natural gas right now, but if you're looking at $3 for natural gas, you're looking at, let's say, $2.90 on the December contract. You're looking at maybe $2.85 on the next contract, and so on. So basically, UNG, an ETF, which is basically a form of a fund, they have to go in and buy that next contract next time. So basically, they're going out, they're buying that next contract, they're losing money as they roll their contracts forward, which is why this looks terrible in considering in comparison to natural gas. It's a good play short term. You know, you want to short term trade it, own it for maybe a big move, sure, but the pure play is always going to be natural gas. And I always don't understand why there's mini natural gas contract, there's micro natural gas contracts. It's like, move into the futures space, guys. Like, you have these very tiny, because natural gas isn't very expensive, so the contracts are actually pretty small. The full size contracts aren't huge. The mini contracts and the micros are even smaller. So once again, it's try to find these pure plays on it, whether it's like you're talking about, Rick, where it's the the stocks inside of it, or if you're looking at the futures, try to do that. Not saying UNG is a terrible vehicle. It's just the way it's constructed. At some point, natural gas, you might have a good roll cost, and you might make more money owning natural gas through UNG than you would even through the futures. So it's going to change over time, but for right now, it is the way it is. Sorry, guys. You guys got anything to add? We got 5 minutes. Rick's first.
I'm curious if there's any like timing spreads that have your attention for natural gas.
Like any place I would want to be to take that trade because of the backwardation?
Yeah, you mentioned that earlier, so I was curious if there were opportunities out there to take advantage of that.
So when you're looking at natural gas, I don't really mess with those. I have a lot of friends who have tried in the past, and a lot of funds who did things like that. But however, as supply and demand changes, especially in the environment we're in. So basically, a lot of those funds that used to do that in 2020, they got killed because everything changed very quickly from the supply and demand structure of the commodities market.
Well,
So
I learned commodities from like Koch Industries. So they're actually physically moving these commodities from here to there.
They have an edge with that type of market.
Yeah.
So they have a huge edge. They could do that much better than any of us could as traders. Understanding that's why you and I, Sam, we watch the COT reports. Why do we watch the COT reports? So we can understand what they're doing. I
It's
don't
their
own.
footprint. They can't
Yes.
hide.
Yes. I do not own I do not own a huge company that holds tons of gold. I do not dig tons of gold out of the ground every single year. I want to know what those companies do, the biggest ones. For me as a trader, I am on the. If you do look at the speculators, I am on the speculators report. So I am large enough to be on the speculators report, but I am not large enough to be a commercial trader by any means. Commercial is these producers that have a lot more money and a lot more opportunity to understand that type of market than we do. So therefore, we want to know what they're doing. And so the COT report is a great way to understand that type of thing. So you could probably, Sam, go through the contracts, and this would be crazy. But somebody who really wanted to get involved in that type of time spread is going through the contracts piece by piece, figuring out exactly where they're coming from, not the legacy COT, but the detailed COT report, and really figure out where it's all coming from, which would be wild. It would take a long time, but I'm sure somebody could create a system that just spits out the data every single day.
Yeah,
That'd be amazing.
I'm sure that exists out there. I'm looking at the natural gas COT right now, and commercials are making new 52-week highs.
As the price is moving up.
Love it.
So as the price is moving up, isn't that crazy? So if we're seeing that, basically what we're saying here, and overall, all three of us, natural gas is bullish. I don't know about, and it's the thing that I said the other week, which is natural gas is the best trade that nobody's looking at. Everybody wants to look at oil. Everybody wants to look at energy. And if you look at XLE, and I'll bring up that chart as we get out of here.
Look at Bitcoin right now, man.
Yeah, what am I talking about? Nobody gives a shit about natural gas. They won't give a shit about Bitcoin, which that's cool. It's making money. Great. But there's other trades out there. And so everybody wants to look at XLE for the energy sector. And I think XLE looks pretty good. So XLE looks pretty good. I'm pretty psyched on XLE still. I am long XLE, but once again, there's just other places to look at in this market, and one of those is natural gas. Natural gas looks great.
For sure. Like inside of the energy complex, like what do you want to trade? Do you want to trade the smiley face or the frowny face?
Yeah.
Everything except for natural gas looks like a frowny face.
Yes.
In the futures market for energy.
And the XLE, some of the big stocks look good. If we're looking at oil, it doesn't look good. If we're looking at oil, we got gasoline, we've got heating oil. All these things look pretty bad. I'm not saying they're not going to move up. I think they could all move up, but I'm just saying they look bad at the moment. So as these all look bad at the moment, I would rather look for something that looks good. And natural gas is breaking out to the upside. The COT report looks good. Volume looks great here. There's not much resistance in this zone. It's probably the best trade that, once again, nobody's looking at.
Coffee. Also, I think we'd be remiss not to mention coffee.
Ooh, Sam.
Potentially the next cocoa. Nobody seems to care about that.
Good one. Let me bring that up here. So, yeah, coffee. They have a weird coffee contract on here.
It's not KC.
No, it is KC, but it's under KT for some reason. Not sure why. Sorry, shameless plug. I was showing how cool I am one time back in the day. So here's coffee, and here's this major move higher here that Sam's talking about, and like this has been really wild. And once again, these are huge contracts. The coffee has a very large contract. I think it's what is it? It's 95,000 today, 97,000. I can't remember. It might be over 100,000 now because it's moved 24% very quickly. So once again, these coffee, cocoa, all of these trades that people just don't look at. These are markets that once people get interested, they really move. And the reason why is they don't have news flow. So we're looking at the equities, for example. Every day you see something out there talking about the stock market, talking about the S&P 500, talking about earnings, and that's what everybody pays attention to. But coffee, nobody's going to pay attention to it. It's just a product out there. You drink it every single day, but most people don't think about it twice. Yep, there you go.
Every single day, man.
Every day. You drink it every day, but nobody wants to buy it in the futures market. That's the damn truth. And really, this is how you make a lot of money. And Sam, you brought up a chart a long time ago. I don't know if they have enough data to really even point at this, but
Yeah, I have all the data going back to the 1970s when the US government was putting price caps on coffee.
yes.
People didn't know if they could trade coffee above a certain level until it did. And we are now running into that level. So
Don't get me
I'm
into
very
regulation.
curious how price reacts to this level. And if we take it out, holy shit, watch out. Coffee's the next cocoa.
Man, so my coffee is just gonna get more expensive. That's terrible news.
It's terrible news. Sorry, guys.
I'm just gonna start hoarding coffee, man.
You need more water, anyways.
It's true.
There's no coffee pure plays out there in the equities market, correct? I mean, I've looked at a few like coffee roasters, but those are like micro cap OTCs. I'm like, nah, these.
No, I wouldn't. Honestly, so is the ETF still out there?
No.
There was
No, they
like a
took it away.
JJOF. There was a
There used to be a cocoa ETF, and they delisted it like the week it started ripping. Something ridiculous like that. Makes you
yeah.
wonder.
There is no JJOF anymore, so I see that. But yeah, I don't know. There used to be a Joe ETF. That doesn't exist anymore either for coffee.
I don't think so.
Let's see.
People couldn't care less about soft commodities.
I
And
know
that makes me so bullish.
Do we have time for one more of Rick's picks that
we're about to cut off.
30 seconds?
Sure.
All right. I just locked it to you. I don't know if we have time.
Yeah, go for it.
But it's the deer. It's the John Deere.
Ayo.
That's one of my picks.
And I know you guys have been looking at that for quite some time. And I posted.
I got some call options in March that have my name on it.
That's beautiful. That's beautiful.
I hope. We'll see.
I mean, it's moving. It's really moving.
I think the best way to look at John Deere is with monthly candles. Look at the uptrend that preceded this consolidation. We have a lot more upside in this name.
Oh my God.
I think, at least.
I mean, the way I did it was not even looking at the candles. I was looking at the monthly close, which I rarely do, monthly line charts. But for something like this was the chart I shared about a month ago, just waiting for that PPO crossover. Monthly PPOs have been an incredible. It's an incredible trade signal. Looking
It's
at
goated.
see as well, the best trends correct through time, not through price. This is what we're seeing with the John Deere, right? Or the Deere and Company these days, I suppose. Every company's changing their names. General Electric is now GE Aerospace. John Deere is now Deere and Co. Anyway,
John Deere is going to be Deere and AI or something.
No, bro, they are doing AI. It's really
And
cool.
they're
The
AI.
tractors,
Cool.
like, are
But
very smart.
if we just look at the next chart, the next chart is today's. I just a little screen grab from today, and it's moving. It's starting to move, and I know I'm cheating a little bit because the month isn't over, right? So we can't use like monthly close line chart on it, but pretty close to the end of the month, and the PPO just crossed over as well. The move we're seeing right now, it's coming out of that range. If we're looking mainly at closes, right? If it closed today. If it closed at today's price, it would be the highest monthly close ever. I know we don't want to cheat. We don't know exactly what's going to happen from here to November, like to the end of November. But I mean, got that PPO signal, and it just looks incredible. Looking for another bull run in the Deere. Not bearish.
Big shout out, Deere.
Not bearish action at all.
No, I like it, and I'm hoping people held on to their calls. It wasn't that long ago that we put out the trade to put on the March calls in Deere. I think it's a great trade. It's an easy company to buy. It's a great environment to buy it in. It's got good seasonality. Like everything looks good for this chart. So I agree with you, Rick. This is a good chart, and it'd be great for long-term traders now. Hey, it's a breakout. Buy it, hold it. I know people look at the chart and they go, man, you go all the way back, it was $5. It's like this thing, who knows where John Deere ends up in 10 years? It could be 20,000. Look at Apple. You know, I was watching something the other day talking about Apple when it became the first $1 trillion company, and then it moved up to like 3 or 4 trillion. Like, you know, you never know where these things are really heading. So once again, it's a continue to pay attention to the charts, continue to pay attention to the breakouts, continue to buy the breakouts, you know, and manage your risk. You should never have a big loss from riding a trend like that. That should be null and void. You should be able to have a trailing stop in there. Make sure you're using trailing stops. Make sure you're managing your risk, and you'll make a lot of money in these markets. All right, guys. Well, thanks, Rick, for coming on. Thanks, Sam. Make sure to follow the speakers. Rick's at Null Charts. Sam's at Sam Gatland. I'm Jason. We'll see you guys soon.
Thank you.
Happy Turkey Week, everybody.
Oh yeah, happy Thanksgiving.